In this video, I'm going to break down the finance tips that you need to operate your e-commerce business properly. Understanding finance is so important, and I get it. It can be very overwhelming, confusing, lots of new terms, but I promise you I'm going to break down this so simply where you'll understand it, internalize it, and be able to manage your business that much more effectively. So let's get into it. So we're going to go through the income statement. This is the most important financial statement that you have as a business owner, because if you use it on a monthly basis, you'll understand what your net profit is, which is the most important lifeblood of your business. So let's get started. So here's your income statement. So the first line on the income statement is your revenue. And what we're going to be doing to make this very simple is using one product sold. So let's say you've done your homework and your sale price is going to be $30. Let's say you're selling a cutting board just to make things tangible. The very next expense is going to be, right, that is the maximum income. That's the plus number that is theoretically coming into your business. And now it comes in the less fun part, which is the expenses. So the very next line is COGS. This is just cost of goods sold. And this is really trying to break down granularly in one bucket of number, what is the amount of money that product costs you to land in your home country to produce everything that goes into it. And if you're a merchandising company, which is pretty typical for e-commerce business, that means that you're not manufacturing, you're just buying a final good from a manufacturer and selling it. So what goes into the COGS? In this information here, this is simply your cost of the actual on a per unit basis. So everything all in, that is going to be your actual product, the packaging, any labeling that needs to be on that product. That is the cost of that product that you get on a per unit basis from your manufacturer. Additionally, you'll need to include your shipping costs to get it landed in your country. Note, this is not the shipping cost from your warehouse to the end customer. This is getting it in your warehouse. What is that entire expense? So very important to understand. So when you think about COGS, right, this is the most important thing, because your manufacturer here is who you're going to bargain with to get this price down. I prefer DDP shipping so I can get a clear line of sight on these two things and really focus on getting that all down. And DDP means that essentially the manufacturer is responsible from the moment that that product leaves the warehouse to it lands at your final destination through customs, from land to sea to back to land if you're going to America. So really working with your manufacturer to lower your COGS is extremely important. So let's say after you did all that math, it was around $10 was your COGS. That means that your next financial line is your gross profit. In your gross profit, the best way to understand this simply is what money is left to actually drive the business forward after my product is sold. And here, that's $20. So this is a number that you want to maximize, because let's say you found a second manufacturer who has higher quality, better communication, shorter lead times. That is a dream, because then you drop down your COGS and then you increase your gross profit, which is your money that's available for your next set of expenses. And these are your operating expenses. Sometimes you'll hear SG&A, and it's just selling and general administration expenses. And for this example, let's say you are selling on Amazon. Amazon has plenty of operating costs, right? Your shipping cost from warehouse to customer. They also have storage costs. They also have fulfillment by Amazon, so using their website, a cost. And Amazon personally has a great website where they can actually estimate the cost of the Amazon fees before you launch this product, so none of these are a surprise. And what do these come out to be? Roughly, I have a product that sells around this range, and you're probably going to be looking at another $10. But that includes shipping, that includes storage, that includes the fees for selling on Amazon. Shopify will have different fees, right? So your net operating income is going to then be $20, your gross profit minus 10, that's going to be $10. And that is your profit. So you're operating at a 33% operating income. So what's something to understand? So now that you see structurally your business and your income statement, you can start to be more strategic. Now you can go through your OpEx, and typically you can reduce storage fees by optimizing your inventory, by reducing the amount of products that are sitting for longer periods of time in your warehouse, right? And that comes through just better optimization of your business. You can't really deal with shipping costs. You could look at, okay, what if I ship this myself? Would I actually be able to get cheaper than Amazon? Or the cost, right? Is it possible for me to use Shopify? Would that lower my cost and my shipping, where I would actually be able to reduce my operating expenses to drive up my net operating income? This is the most important part of your business, and you want to make this number as big as possible. And if you understand what goes into that, you can operate that much better. And this is, again, before taxes, but you can also calculate your income after taxes. But for the purposes of this demonstration, that is all you need to know. And guess what? Another expense here that we didn't talk about, which would be included, is your advertising income. What's your marketing spend to try to drive more income? That's going to come in here, right? But it's going to reduce your net operating income, but it will also increase your revenue, right? So that's a balance as a business owner that you need to understand of, am I getting the bang for my buck by increasing my top line, but yes, I'm increasing my marketing expense, but is that increasing my net income for the month? That's the beauty of business. It's a game. It's you making decisions like this, choosing a different manufacturer, choosing which website you want to sell on, choosing your marketing strategy. These are all key things that are going to impact your bottom line. And if you understand your business through this framework, you will help maximize profitability, have a clear line of sight on what costs you need to be aware of as a business owner to help yourself stay in business, because the only thing you need to sustain your business is positive dollars in the net operating income line. That's it. As long as you can manage to that, you have a successful business, and you can continue to find ways to increase your revenue, decrease your cost of goods sold, decrease your operating expenses to then maximize your net operating income. So this is it. Make sure you have very granular detail on each of these costing information, because the health of your business relies on that. So hopefully you found value and can use these tools to help you assess your business and drive it forward. So any other comments you have or questions, drop them in the chat box below. I love talking finance. I love e-commerce. This is a space I want to make a lot more videos on and to provide more value to any viewers. So thanks for listening to Live to Learn USA. Hope you got some good value here. Feel free to subscribe to the button in the middle here. Talk soon.